Good morning, everyone. Good afternoon or good evening from wherever you're joining us from across the globe. Welcome to today's webinar. And our topic is Steering Risk and Governance Through Geopolitical Turbulence. It's indeed wonderful to have you with us, and we thank you for taking time to join us from wherever you are in the world. Before we get started, I'd like to say a few words about the Corporate Secretaries International Association, CSIA, and why today's conversation is one that really resonates with us as professionals. At CSIA, we're proud to bring together corporate secretaries and governance professionals from across the globe who share a commitment to good governance, ethical leadership, strong organizational stewardship, and helping organizations to succeed. And one of the greatest strengths of our community is the willingness to learn from each other, exchange ideas, and share practical experiences as we all navigate in an increasingly complex world. As governance professionals, we have a unique perspective. We work alongside boards, executives, regulators, stakeholders, and often help to connect the dots between strategy, governance, and risk. While much of our work happens behind the scenes, its impact is felt throughout the organization. As corporate secretaries and governance professionals, we play a vital role in ensuring that organizations are well governed effectively, risks are appropriately understood and analyzed, and also managed, and strategic decisions are supported by robust information and sound oversight. That's one of the reasons today's topic is very important to us. Around the world, geopolitical events are creating new challenges and new uncertainties for organizations of every size. The environment is changing rapidly, and boards are being asked to make decisions in circumstances that are often more complex than ever before. At times like this, good governance really comes into its own. It provides a structure, the discipline, and the confidence that organizations require to make sound decisions, respond thoughtfully to change, and build resilience for the future. Corporate secretaries and governance professionals indeed have an important role to play in that journey by helping boards to stay informed, ensuring effective oversight, and encouraging good governance practices. We help organizations to navigate uncertainty with greater confidence. And that is why CSIA is so pleased today to be co-hosting this webinar. It is an opportunity to come together, learn from leading experts, and exchange ideas about how we can strengthen governance and risk management in an increasingly unpredictable world. We're also very fortunate to have an outstanding panel of speakers with us today. They bring a wealth of experience and insights, and I'm very sure they'll leave us with plenty to think about as they share practical experiences and perspectives on steering organizations through geopolitical turbulence. Before I hand over, I would encourage all our participants today to make the most of today's session. Please send through your questions and comments as we go along. We'd love this to be very interactive. Thank you once again for joining us. I'd like to say a big thank you to our co-organizers, GAA. Thank you so much for your partnership. We do appreciate it. And to all our participants today, thank you for joining us. I hope you enjoyed the discussion and that you will leave with ideas and insights that will be very valuable as you navigate this current geopolitical situation across the world and help your organizations to succeed despite all that is happening. Thank you so very much for your kind attention. Over to you, Keith.
Thank you, Funmi. May I add my welcome to that of Funmi on behalf of the GAA. My name is Keith Morrow, and I'm Managing Director of Camelin Limited and a founding advisor of the Global Advisory Alliance. In the past 5 years, the annual risk report published by the World Economic Forum has seen climate and environmental risks being supplanted at the top by geopolitical considerations and has brought this subject to the forefront of consideration by organizations. This panel discussion will look to address how geopolitical considerations may be as much about strategic governance as they are part of ongoing risk assessment. Furthermore, we look at the role played by corporate secretaries and governance professionals in support of their boards, ensuring that their directors and leaders are properly equipped to consider the geopolitical landscape appropriately. With me to discuss this, I'm delighted to have Claudine Fry, George Dallas, and Richard Howitt, and I will let each of them give a quick introduction to themselves. Claudine.
Hello, everyone. Lovely to be with you today. I'm a partner at Control Risks. It's a specialist risk consultancy. We operate around the world. We have 42 different offices around the world. I'm based at the UK headquarters in London, where I'm joining you from today. I work in our Geostrategic Advisory practice. So I work very closely with boards and leadership teams to help them understand what's over the horizon in terms of sort of geopolitical risk and other sort of macro trends that are evolving the business environments that they are operating in. And help organizations to work out how to take a structured approach to thinking about those issues and the opportunities they raise as much as the risks. Nice to be with you.
George.
Thank you. And firstly, thanks to the organizers for putting this together. A great job. And thank you for including me. My name is George Dallas. I work with an academic body called the European Corporate Governance Institute, focusing on research in corporate governance and sustainable investment principally. But I'm bringing mainly an investor's perspective to this discussion, not only what I'm doing at ECGI, which has an academic dimension to it, but my prior experience is certainly on the investor side, starting out with Standard & Poor's, or looking at credit risk at companies and countries. And then I've been in asset management at F&C Investments in London for a number of years. And then latterly, I was policy director at the International Corporate Governance Institute, a global investor body. And I guess just by way of introduction, I would say throughout all of this long career, issue of geopolitics has never not been there. It's just taking different shapes and forms. And I think that the idea of country risk and risk assessments is implicit in the kind of work that certainly a rating agency would do, or even investors would do, in trying to break these up. And I think, if nothing else, I think that today's discussion, as we'll hear, is, I think, just being prompted in part by the fact that it's just picking up in lots of unpredictable ways. So I'll stop there, Keith.
And Richard.
I'm Richard Howitt. I'm a former politician. I was 22 years a member of the European Parliament, 10 years with active spokesperson on the Foreign Affairs Committee of the Parliament, dealing with some of the major political developments in countries around the world. I was the Parliament's acknowledged specialist on responsible business and human rights. And when I stood down from politics a decade ago, I worked on the business-led efforts to create what is today the International Sustainability Standards Board. And I'm very much bridge the efforts that Keith talked about in his introduction between the external impact on the company of climate and of sustainability challenges and of geopolitical changes, which we're discussing in this webinar.
Thank you, Richard. Well, to open the discussion then, it was a question I'm going to put to each of our panelists in turn. And why should boards consider geopolitics a strategic governance issue rather than a specialist risk function? And if I can start that with you, George, please.
Yeah, well, I would just preface this by saying, if you don't mind stepping back, I mean, Francis Fukuyama, the very well-known political scientist, wrote in 1989 a paper called The End of History. And his point was that liberal democracy triumphed over, the other force, particularly vis-a-vis the Soviet Union, and the world was on a trajectory of relative stability governed by market economics and liberal democracy. That was wishful, and sadly, I think the end of history has ended. And I think that it's more, in some ways, more disruptive than ever. And I think in part because of the country that I represent, the United States, I think it used to be the safe haven, but now I think it's one of the main disruptors in the game. But to the specific question, Keith, I think that it's not a new topic, but I think we're recognizing that this issue can be an absolute game changer. And I think the way that you've teed up this discussion to say, yes, it's not just another item on the risk register, cyber tick, risk management tick, political risk tick. I think it has to be much more overreaching, because I think a good political environment, geopolitical environment, can rise all boats, and I think a bad environment can basically bring everybody down. And so I think that we're seeing this in a way that we haven't seen for a long time. The world is very disrupted, and I think that this is directly something that boards who've gotten used to sort of a global model of business and supply chains, this is all getting changed. And I think that this is a real source of strategic and philosophical, deliberation that boards have to take in this environment. I'll stop there.
Richard, can you add your perspective to that one, please?
Yeah, two things really. One is, I would say geopolitics used to be a one-off risk. Maybe a war breaks out. What would we do? It won't do. But what would we do in the circumstances? Whereas now, as you say, in the World Economic Forum top risks, external shocks are 7 out of 10 of the big risks to the company. And so those unlikely and unexpected events are actually happening all day, every day, and do directly affect the company. And therefore, just the sheer scale of what's happening is causing companies to rethink how they deal with it. And then the impact on the company itself. This isn't just for risk management professionals. It impacts procurement. Supply chain resilience is a huge issue. It impacts finance, taxes, sanctions that are having to be dealt with. It deals with legal because there are new compliance and regulatory developments out there all of the time. It deals with communications because it affects the reputation of the company on where it stands in relation to the different geopolitical conflicts and events that are happening. And so this is a whole company issue, and it's an issue which affects the markets that the company is operating in. And so you can't afford to just say tick box on the risk register. It is one where every aspect of governance of the company is affected.
Very good. And Claudine?
Thanks, Keith. Yes, I mean, I completely agree with everything that's already been shared. I would say, it has to be treated as a strategic governance issue because geopolitics is driving every kind of risk that you can imagine, and that tend to be managed by specialists, whether it's digital risk, compliance issues, security, supply chain risks. And so it can often fall between cracks in an organization in terms of ownership. And treating it strategically is one way of making sure that there is a sort of oversight and a shared understanding of how geopolitical risk is evolving and how it's going to impact the organization, and that different functions are part of the conversation about that potential impact on an ongoing basis. And as Richard has just said, the scale of the impact, I think, is another really important point. I mean, we're talking about an environment in which the accessibility of entire markets or parts of a tech stack, for example, could come into question as a consequence of geopolitical development. So there is a strategic nature to the impact of geopolitics, which needs to be understood and communicated about at board level. I think critically also managing geopolitical risk means that any organization doing that effectively is not only managing strategic risk, but it's also capturing opportunity effectively as well. So I think that's a really key part of this conversation, that if you're managing a geopolitical risk, you also are identifying opportunity. If you think about what's been happening in the Middle East over the past few months, it's been, clearly an enormously significant risk issue, many different issues associated with what's been going on there, both in the near term and in the longer term. But actually, the situation has produced opportunities as well. Supply chains, for example, are probably never going to go back to how they were before, in many cases, before the 28th of February. And so that has generated opportunity in some cases as well. And I think also important to just mention the accountability issue here as well, of course. I mean, there are just far fewer excuses now, I think, for boards to be caught out by not having anticipated a geopolitical shock coming down the line off the back of everything that's happened over the sort of last 10, 20 years. There is a responsibility that sits with boards to be ensuring that the organizations that they're supporting are not caught by surprise.
Thank you. Just then to move towards, I suppose, what strategic and operational impacts are arising. And I'll put to you, George, which areas of organizational strategy are most vulnerable to geopolitical disruption?
Yeah. It obviously, it's a general question, and it's a good question, but I think that it's going to depend on the individual organization and its business mix, really. But I think the point, just to build upon what we were saying before, this is something that it just doesn't alter risk levels. It really alters potentially system level architecture. And I think that, when people look at these issues, I think we've already heard supply chains come out, and I think that is an obvious one. And I think, but other issues, I think that fundamentally that we may be thinking about having to review business models, again, of companies that have had some sort of global perspective on sourcing supplies and what have you, or may need to rethink their businesses entirely. I think boards need to think about concentration risks. How much is one dependent upon one part of the world, and how stable is that in one shape or form? And so, it's going to be, I think, context dependent. It's going to be sector dependent, but it's, the issue is, what jurisdictions do we live in and touch, and how can we deal with these most effectively? Do we have unhealthy concentrations? Do we have a supply chain that's durable? Are there technology issues or competitive issues that we need to think about at the national level? And so I think it's a range of issues along these lines that come to the fore when these political issues basically challenge the existing status quo.
Mm-hmm. Claudine, do you have anything to add on that particular question?
I think I would just, sort of reinforce the point around the fact that it's a holistic impact, and so it's really key to be thinking about organizational strategy as a whole. When thinking about geopolitical risk and disruption, and to make sure that it doesn't fall between cracks, and so stakeholder engagement internally around identifying what to be talking about and how to talk about it, it is really, really important, because otherwise you're going to miss really key points around how something is evolving, what's driving it, the velocity associated with how quickly it's changing, when it's going to impact the organization, and how.
Okay, thank you. Richard, moving on to a different question. How can organizations balance global growth ambitions with rising geopolitical constraints?
Well, the era of globalization is definitely over. Whether people think that's a good or a bad thing, that's up to them. But the idea that we've got freely open trading, capital movements, and to some extent labour movements across the world, it's just not there anymore. There's a huge fragmentation now, and many more national controls coming up, and many more shifting alliances of different coalitions of the willing that are working with each other to the extent and putting fences up against the others. And that clearly is a huge challenge to companies who want to extend globally. Of course it is. I think it is about diversifying your supply chain, so you're not dependent on any one particular country or group of countries. It is about recognizing neutral markets. We've got a huge number of representatives on this webinar from Asia and from Africa, who are probably wouldn't see themselves as coming from countries that are parts of big power blocks. There are some advantages in that, and to exploit that to your greatest benefit. It is about recognizing if you have subsidiaries in other countries, that they're going to be subject to really different pressures compared to perhaps the headquarters of the company. And it's about giving those people slack. They need flexibility in what they do locally, but it is also making sure that they comply with the company's ethical standards. There's some really difficult balancing acts that are taking place there. And finally, it is about monitoring risk. I'm sure we'll say this later, but a lot that happens in the world is unpredictable, even with the greatest of specialists. But companies now need to have far greater intelligence in terms of what's going on. And there's lots of information and advice out there in relation to what may and may not happen in terms of geopolitical risk. And there isn't an excuse anymore for the company not to know that and not to do that. It has to be part of the fabric of the modern company.
Okay. And Claudia, if we look at this across the sectors, which ones are better prepared than others? And I suppose what lessons could be shared across the industry?
Yeah, so I think as has typically been the case with political risk over certainly the last sort of 20 plus years that I've been in the industry, generally the sectors that are the most mature and sophisticated in terms of how they're thinking about geopolitical risk are the ones that are most directly exposed and have the most experience of managing the impact. And that tends to be energy, telecoms, pharmaceuticals. I mean, I've definitely seen some exceptionally sophisticated setups in those sectors, and particularly in the context of managing tariffs since Trump returned to the White House in the early part of 2025. But actually, I think what's been really interesting, even for those kinds of sectors, is that there's been a need to adjust and sort of right size and update the approaches that they're taking, because aspects of the way that we need to think about managing the risk have changed, and also the risks themselves are evolving so quickly now. I mean, to a question that we've been asked by an audience member about what's really changed over the last 10 years, I think one of the key things that's changed is the fact that geopolitical risk is something you have to think about wherever you are, whatever you're doing, whatever your sector, and whether you're operating in the global south, the global north, in developed markets, developing markets, it is something that is going to hit you wherever you are. And also, companies themselves have often been going through quite profound shifts in terms of their identities, what they're doing, and where they're going to be, securing growth over the future. To give you one example, I know an oil and gas company that was very sophisticated in its approach to geopolitical risk, but actually, as it was transitioning into the renewable space, it had to completely rethink the way it was approaching geopolitical risk, because it's the stakeholders it was familiar with and the way that those stakeholders operate was very different in the context of renewables, and who they needed to know and influence, and the kind of drivers that affected they're likely to approve and facilitate operations and so on were just completely different. So I think some sectors are more experienced at managing geopolitical risk, and they have more institutional capacity, awareness and buy-in. But actually, even those, even in those sectors, we're seeing companies having to refresh their approaches and also invest much more into managing geopolitical risk. I mean, just the sheer amount of resource that companies are having to deploy into managing the trade war or into managing the growing compliance risk associated with sanctions regimes that's really, really significant. And I think that goes across sectors. But certainly the lessons that organizations can learn, I think they're in many cases, I think they're actually sector agnostic. So whether that's about the value of scenarios as part of the process, or whether that's how to incorporate tech and AI, who to involve in the conversation, some of the principles around how to manage geopolitical risk, I think they are things that can be applied right across sectors.
Thank you. George, did you have anything you'd like to add to Richard and Claudia's comments?
Well, I think Richard made an interesting point about the deglobalization and sort of regional fragment. And I think particularly for this audience, something that I've followed with interest. And I don't know if and I'll put this against a background. Traditionally, I think the Western European or U.S. Anglo-American model has often been seen as, something that people in other parts of the world will aspire to in their governance standards. And I'm concerned that status, potentially has been should be rightly challenged. And we're seeing, I think the leadership and the moral authority, I think that's one of the things that's really changing. And I've noticed with some degree of interest the revival of BRICS plus, be it Brazil, Russia, China, South Africa, but they've actually expanded, thinking about currency work together. We'll see if that plays out or not. But I think it's just a manifestation is that a traditional way in which I think a lot of emerging markets have looked to the West is how do we, rise to their standards. And I'm not sure the West is necessarily showing those standards anymore. And I don't think that's necessarily helping the equation. And then on Claudine's point, again, I bring a bit of a U.S. perspective on this. I've been reading some legal analysis that says in the U.S. there's particularly in the Court of Delaware, there's a fiduciary standard called the Caremark standard, which implies a degree of liability on directors to anticipate logical, non-traditional, often environmental and social risks. But I think that this Caremark standard of due diligence can equally be applied to company directors. That's saying if you're not on top of these issues, you're not doing your fiduciary duty, and you're not doing your job properly. So I think that's I think that there's going to be. I think that awareness is there, and I think that's going to continue to build, at least in the United States.
Can I just add to that, Keith? I agree with what George says about Anglo-America challenges at the moment. But if you look into the BRICS, you've got Russia there. And for people outside of Europe, I think there is still an underestimation of how far Europeans are really scared and frightened about Russia's military ambitions. And that has led to, I think, 24,000 sanctions decisions against Russian individuals and organizations. And it's led Russia, of course, to pursue very different channels, particularly in terms of finance and payments. So that's not a neutral decision in terms of trade with Russia. And then China is, going to become the biggest economic force in the world, and in some respects already is. But there are really twin challenges in relation to China because of its human rights record, of course, and democratic challenges, but also because it's such a fantastic economic producer. And so there are huge challenges that come from competition with China as well. China is massively overproducing at the moment and is trying to sustain domestic living standards by dumping goods on international markets. All of these things create competitive challenges to companies in countries across the world, not just the potential for markets and cooperation. And so I don't want to appear anti any country in this webinar. I think we're here to analyse it, not to put our personal preferences, but the challenges in the world that exist in this new world of fragmentation aren't just from Trump's America, from Europe that we've not discussed yet, but may come on to, but are indeed from Russia and from China. And companies need to have their eyes wide open when it comes to each of those challenges.
Yeah, very good. Thank you, Richard. Moving on further, now let's start to switch the lens slightly. So we've got a good understanding for the panelists of how geopolitical risks are treated. Let's now try to move that towards, well, from a governance point of view, what can companies start doing or potentially do differently or address further? And I'll put the opening question there to George is, what governance practices are most effective in helping boards respond to geopolitical uncertainty?
Well, I think it's just building the awareness. I think again, just a theme that I've just gotten from this conversation from everybody is that, geopolitical risk is not just an exogenous factor that's outside the purview of boards. It's something that boards need to develop literacy in and become and understand how it relates to the company. This is in some ways, new areas of risk. And I think one of the great challenges is that we're asking boards to do more and more stuff all the time. And the job is getting harder and not easier, but I think the magnitude of geopolitics is such that you can't really avoid it. A small statistic, and this is more relates to management than boards, is that piece of research that I've read by a Stanford law professor looking at geopolitics said that 5% of the Russell 3000 companies have a political risk officer. Now, that doesn't mean that political risks are being unassessed in companies, but it does suggest that the function is potentially less developed than it might be. And I would suspect over time, if you're, Keith, getting into questions of what should leaders do, is probably both a question of building awareness and understanding at the board level, but also at the executive level as well. And I think that whether some sort of function or specialized function reporting, and I think boards going to need to find a tactic, a means to come to grips with these issues, and probably starting with some internal expertise and maybe peppering that with external expertise from time to time is one way to address that.
Yeah, Richard, you're nodding there. Do you have something to add to that?
Well, my main plug would be for scenario planning. And that's become, I would say, in the last 10 years, that's now become part of everyday practice in many companies, certainly large companies. And I would strongly advocate it for companies that are not already doing it. Very early in my career, I was part of emergency planning in a part of London where I worked. And we simulated a plane crash in our borough, and then we had a 24 emergency planning response for it, drawing on all the different specialisms. And we made some horrendous mistakes, but I learned from them. And here, 40 years later, I'm still remembering it. And so there's nothing like getting into the detail, getting into the weeds of the geopolitical challenges that are out there and letting it play out and working out what the mistakes would be and then taking that institutional learning forward. So I strongly advocate that to all the companies watching and listening.
That was a very forward-thinking thought 40 years ago to actually do a run-through of what might happen if this happened. And the fact that you're still referring back to it shows how congratulations to that borough for coming up with the idea. Claudine, you look there that you wanted to chip in on that one.
Thanks, Keith. I think there's a few things I'd throw in as well. I think, I think there's a real need to what I hear quite a bit still is a reliance on news, and quite often when I see an organization and work with an organization that is very engaged on geopolitical risk, it's quite often linked to the fact that the CEO, for example, is just really passionate about it. So it's quite often driven by a particular individual who is senior and has authority and a mandate, and just happens to be fascinated by it or engaged in the issue, and therefore makes it prominent in discussion. But I think there is a particular role for governance professionals and board members to play specifically in taking the conversation beyond that sort of news-driven focus on geopolitics to thinking about things in a structured way. And so there's a real methodological rationale behind consideration of one thing over another. I mean, the amount of times, for example, we were quite often asked about Taiwan after there's been a sort of flurry of developments, or it's suddenly in the news for some reason, and then everybody forgets about it for a while. Or there's a board meeting I'm aware of here in the UK where there was going to be a focus on the legacy effect of the Middle East conflict, and then it was changed at the last minute to the UK political situation, which is something that we're asked about increasingly off the back of recent local election results here. Now there may have been very good reasoning behind that, but at the same time, it does sort of point to this news-driven approach, which I think we need to be mindful of, perhaps sort of shifting the dial a little bit, and the recognition that the other thing I hear quite a bit is you can't do anything about it. That is not true in terms of managing the sort of awareness about the likelihood of potential geopolitical scenarios materializing, and certainly around understanding the implications of particular trends materializing. Yes, you can't affect the likelihood of Russia invading Ukraine, or of a situation escalating on the Korean Peninsula or between India and Pakistan, but you can affect the potential. You can sort of act swiftly and proactively to understand the likelihood of things emerging in ways that have specific impacts on your organization, and then prepare for those impacts. And I think the other thing I would just throw in is I think it's a very emotional issue. Geopolitics is a very emotional issue. It's an emotional reaction to geopolitics. And I think the most effective boards are going to be the ones that are able to take that emotion out of the conversation, and sort of find a way of being able to talk about geopolitics, which I think is becoming increasingly contentious and difficult, in ways which are useful. And so sort of having impartial perspectives, having a sort of environment where it's a safe space, if you like, for people to share different perspectives on the roles that different countries are playing in the world, and what that means for an organization in a very dispassionate way.
Mm-hmm. Okay, very good. Just encouraging everybody to continue popping your questions into the Q&A function or directly into the chat as you wish. And next question for you, Richard, and I think you may have answered this in part, but I'm sure you have something else to add, is how can boards incorporate geopolitical considerations into their strategic planning and risk oversight processes? And I know you've mentioned already the scenario planning piece.
Yes, I definitely would underline that. If I was to add something, I think it would be about the board's oversight role. I also work in sustainability, as I said at the beginning, and about 30% of company directors in surveys say that they feel properly skilled and knowledgeable to be able to deal with sustainability challenges. When you look at the same surveys about geopolitical risks, it's 3.5%, and so boards are not skilled up to undertake their oversight function, and so that's resolved through training. It's resolved through engaging with external stakeholders in order to build one's knowledge. And it's also about board diversity and making sure companies recruit new directors who do have appropriate skills and knowledge for the new situation that we're in. Boards, company secretaries watching and listening to this, understand board evaluation, how far have you done board evaluation on skills and knowledge on geopolitical risks? A huge number you won't have done. Let's be honest, you should be doing from now onwards.
Yeah, no, a very good piece of advice there, Richard. So then, Claudia, what capabilities and mindsets will boards need to have to remain effective across the next decade?
So I think, just to build on what I already said, I would just reinforce the point around leaning on expertise in geopolitical risk and incorporating that into the sort of heart and soul of how they see their roles. But I think overall, just quickly, focus and persistence. I think keeping geopolitical risk top of mind, it's still very often the last issue on a risk register, and not sort of explored with any detail, and it's often a sort of brief mention in a board agenda, and so it's going to take quite a lot of persistence, I think, to give it the kind of qualitative attention that it deserves.
Okay. And now, if I can
I build on that point, Keith,
please, George,
because I think that's a good one. And how do you make it more urgent? And I think one thing that hasn't cropped up in today's discussion that could be a good is looking at the issue of capital allocation, which is one of the most fundamental things that boards do. And you don't need to be too creative to sort of see how capital allocation, looking at how you're going to deploy your capital in the future, has to directly involve these pieces. And I think in some ways, if it's framed that way, I don't know if that might have helped to establish more urgency, but I do think there is a clear capital allocation dimension to boards dealing with these risks.
Yeah, that's very interesting, George. Thank you. Now I'm going to invite Funmi back into the conversation, and just if we put the question to wear a governance professional hat, what do you feel corporate secretaries and governance professionals can do to help directors navigate what are increasingly complex and ambiguous risks?
Thank you very much, Keith. Like I had mentioned in my opening remarks about the critical role that governance professionals play in being trusted advisors to the board. Now, coming to geopolitics, this is no longer a macro, footnote. It's now governance and fiduciary risk. And governance professionals have to continuously ensure that the issues of geopolitical issues are very much reflected in the board agendas, even in committee works. And it must also be reflected in different reports across, the group assurances. All of these have to be taken into consideration in strategic decision making. Having said that, the company secretary, governance professionals, must also ensure that they help the board to connect the risks across strategy, compliance, and other stakeholder perspectives. The governance professionals today have that onerous responsibility to help boards to see the bigger picture rather than viewing the issues in isolation. So it's not just about what we're reading on the headlines. How does this affect or impact the long-term, strategies of the organizations? And just to wrap this up very quickly, perhaps the most important for governance professionals is helping to maintain that good governance discipline during the periods of uncertainty. And this is because it's most likely that the board could be persuaded in taking certain decisions that might be hastily done and end up being the wrong decision. So in situations like this, governance professionals have that singular role to ensure that boards take those decisions that would sit best now and after the entire geopolitical, headwinds have gone down, ensuring that decisions are well informed, well documented, and aligns with the organization's long-term purpose. I know I have just 2 minutes and I was just trying to rush that. So there's a whole lot that the governance professional can do to continuously ensure that the board is well informed and well on top of taking strategic decisions that are best suited for the organizational goals to be achieved, even during periods like this. Thank you, Keith.
Thank you, Funmi, for that perspective on our discussion. And before we move to the Q&A, and we've had plenty in, and thank you to our audience for that, I have a closing question to each of the panelists. And if you could recommend one action that boards should prioritize today, be prepare for a more fragmented and uncertain future, what would that be? And I'll start with you, George.
Great. Thank you. Yeah, I think it's probably repeating something that's been said by, I think, all of us at one level. I think the board needs to understand that this is something that is strategic. It can't be outsourced. The board needs to own this. It's not just the political risk officer, but this is a fundamental risk. And I think that the issue, I get there's a tactic that would strike me as logical, and Claudine, I would look to you more for guidance on this, but having some sort of holistic geopolitical risk assessment as a regular exercise. Where are the vulnerabilities? How should this affect strategy? How should this affect capital allocation? And I think that I'm not sure boards necessarily need to have political risk specialists as part of them. Maybe for some companies that might be a relevant formula, but I think that there's every reason to expect that the board will either, develop internal capabilities and/or external capabilities so that the board is sufficiently alert to this. But I think it's like sustainability. And Richard said this, very nicely a moment ago. Many years ago, most directors had no clue about sustainability, and I think that's still an area of improvement, but it is improving very quickly, and certainly much more ahead of, say, political risk. And I just think it has to develop in a similar direction. I'll just stop there.
Richard, your closing piece of advice.
Okay, I'll just start, if I may, by adding to what Funmi said. I think company secretaries have a key role as gatekeepers on this to check the quality of the information. Is the company really taking its geopolitical intelligence gathering seriously enough, and to be prepared to say no and to throw back, to ask questions going down into the company so that the board can then ask their own questions. I think that's really important, to clarify legal responsibilities so that this is properly addressed within the company as a whole, and to clarify legal duties as well in relation to what might go wrong. On my one bit of advice, it probably is scenario planning. Sorry to divide it yet again, but why? Because this is part of strategic foresight. A lot of the work that we've all been doing, that I've certainly been doing in the last years, is about helping companies to think longer term. I don't know anyone in a company that doesn't want that company to be existing in 5 and 10 and 15 years. Of course, short-term returns and profitability is really important, but how you balance that with long-term returns, but also even the existence of the company, is, I think, a challenge which increasingly boards are addressing. And the geopolitical considerations, the conflicts, the events that are happening that are having dramatic companies on markets and on companies, alter that balance in terms of company directors doing that job. And one final one, talk to your competitors. In the sustainability world, we talk about the pre-competitive space, but so many of the challenges are sectoral. You can bet your bottom dollar that your competitors are having the same discussions that we're having today. And there's a certain degree of mutual advantage to actually learn lessons amongst each other and not just within the company itself. You can afford to be brave and to do that.
Yeah, thank you very much. Interesting piece of advice. Not everyone might think of going to their competitors for help, but it's such an unknown. It is probably well-founded. And finally to you, Claudine, on that question, what one piece of advice can you offer?
My piece of advice is to to sort of use your position to check that geopolitical risk has a clear owner. There is a clear owner with responsibility, but also critically resource to actually be responsible for making sure that geopolitical risk is being identified, assessed, monitored, managed, communicated about. And I would have a look for evidence of whether that's currently in dispute, or where there might be someone who's trying to own it, but not being given the resource or mandate to be able to get on with the job. I know a number of different particular GCs who are trying to do it at the moment, and they're struggling, but they've recognized that it's something that needs gripping, and they've just decided to try and do it themselves, but as a sort of side hustle, and without the institutional and financial backing and the mandate to really do it justice. So I would say use your roles to sort of make sure that the company is owning the issue and doing it in an effective way.
Okay. Well, three great pieces of advice to bring forward then for everybody. Now I'm going to switch to Q&A and get through as many of these as we can. So first question here is, with evolving sanctions regimes and cross-border regulations, what governance practices are proving most effective, ensuring compliance while maintaining business agility? George, is that one you could take?
I'm not sure I do a very good job with that, to be honest with you. I'm not even sure I see the paper. I see the question now. I just think it's probably just having to have the ability and the way to a method of processing this type of information and how that's relating to the business. And I think Richard made a very good point about scenario planning. I think that one thing we do know about the future is we don't know what's going to happen, and we may have some different intelligent guesses as to how things might play out. And I think that may be that may be the better, that may be the most rational or the most logical. And I think the whole issue here is that we're shrouded with more uncertainty than we're comfortable with. And I think scenario planning and linking this into, again, capital planning and what have you, strategy is the way to do it. Integrating this into the board, and as Claudine said, having owners, I think probably both at the board and at the executive level.
Yeah, and if I can just add to that just quickly, on the sanctions issue specifically, I think it's really key to be understanding the drivers behind sanctions, to understand how they might hit, as well as monitoring what's actually being introduced and enforcement patterns. So, for example, watching really closely at the moment around potential for much greater divergence between the EU and the UK and the US. And also thinking about how secondary sanctions are being used much more in different parts of the world, and including in Asia. So really, for example, we've been working with Indian companies who have been really shocked to see the way that they have started to be having to think much more seriously about sanctions risk, as Western countries have been targeting India for the role that India's played in supporting Russia over the last few years. And then I'd also just quickly say, get the training and awareness internally really, really spot on, so that there is that understanding across markets, including those that are not traditionally familiar with sanctions risk, that they're aware of what sort of processes are required to manage the issue.
Yeah, great. And just maybe now to you, Richard, there's a question here. How can leadership ensure risk management isn't just a boring legal checklist, but is actually embedded into the daily workplace culture and employee behavior?
I think the culture of the company is important. And there is a concept of the nationality of companies. We all think that all companies now are essentially global, and cross international barriers. But very frequently, companies carry the culture of the nations in which their headquarters or their founding operations are based. And that can then produce some limitations in terms of perspectives subconsciously within the company itself, and so they have to be able to think beyond that. And because we're running out of time, if I just must say one thing, we haven't today referred to the huge global race for digital and AI supremacy, and the risks associated with that. And US is 60% of AI, China is 26%, so everyone else is falling a long way behind. And where you want to create your dependency and how you might want to diversify is a huge issue in terms of geopolitics at the moment. So I didn't want this webinar to finish without having a chance to say that.
George, did you have something to add there?
No, I think that's. I think that's. I was just nodding in agreement with Richard. I think that that's. I think particularly the U.S. China. We haven't really talked about that. That's one of the greater tensions now too. That I know people in Asia are needing to. It's creating uncertainties, and but I think, yeah, nothing on top of that. No.
Yeah, and a question to you, Claudine, what resources outside of the news cycle do you think would be helpful for companies to use to better understand the geopolitical landscape?
Well, I mean, check what's already available in the organization. The chances are that the government affairs and external affairs teams, public affairs, strategy and risk teams are all, they've probably all got their own feeds of geopolitical intel. So check, maybe it's worth sort of encouraging the organization to sort of do a bit of an audit of what's already coming in. There's probably some expert comment coming in, and some feeds of intel which can be used at sort of C-suite level as well, and sort of checking how they are being incorporated into understanding geopolitical risk. But there are lots of there's control risks and many other organizations in our world. We also provide a lot of dedicated reporting, but there will be expertise within your organizations. So tap into that, enhance the impact of that where it's useful to do so with external expertise from the academic world, the government world, and specialist risk consultancies as well.
George, coming from your perspective, can you add anything there in terms of resources that would be helpful that you've come across?
Yeah, it's a good question. I mean, I think that Claudine's right. First of all, I wouldn't necessarily underestimate the news or analytical news. I mean, I read the Financial Times every day, and there is excellent stuff to be found there. And I suspect that the economy. I mean, there's lots of good sources of insight which raise political types of issues that bring that to the awareness. I think Claudia. I mean, she's being very modest about the fact that she's offering this stuff as a professional service. But I think if you really want to dig deep, you probably need to, tap these types of resources to make sure that you are. Companies probably have a lot of the information that they need already, but you never know. And I think having a bit of external input can be very useful.
Yeah, very good. Okay, as we come back towards the top of the hour, I'm just going to close us out. Just, I suppose, for any participants, and I know we haven't got to every question in the Q&A, but if anybody who's interested in further discussion or exchange of top thoughts on this topic, the GA will be hosting a series of invitation-only roundtables under Chatham House rules. And if you'd like to participate, please send an email to the address in the chat, which is going to populate there shortly. And then this same address will be shared in an email together with a link to the recording after this event. So it just remains now for me to thank you all once again for your participation and attendance, and to wherever you are in the world, have a great rest of your day. Thank you.